What's up, people? Welcome back to Invest with T-Claus, and welcome to 2023. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. As always, come for the information and stay for the perspective. It does feel like forever since I last posted it, and it's definitely good to be back. Now, before we get into the main topic that is Virgin Galactic, you need to be aware that next week on Thursday, January 12th, will be the much anticipated CPI data for the month of December. Now, expectations are for a 5.7% year-over-year increase, which is significant still. Fun fact, you'd need to go back to 1981 for a similar year-over-year increase. Now, with that said, it would actually represent a month-over-month decrease from the 7.1% number posted in November 2022, and that would mean that inflation is actually cooling, which is a good thing. Now, my point in telling you this is the same as always. Inflation data release week is consistently volatile. Do not chase any green candle you might see in the charts. The market isn't going to take off and run away just yet, so no need to feel FOMO. With that out of the way, let's get into today's main topic, which is Virgin Galactic. We closed out 2022 by setting a new all-time low, and so for today's video, I want to take a quick look at the stock performance in 2022. Also, I think it's worth revisiting the cadence of activities Virgin Galactic planned between now and commercial flight, and close out with what I've done personally as far as buying or selling since we last spoke. So, as always, this isn't to be taken as financial advice. I am not a financial advisor. This is my personal approach to investing and the thought process behind it. I'd recommend watching all the way through so that you don't miss out on any pertinent information I'll be sharing. Drop this video an early like if you haven't already, and hit that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. Well then, the 2022 stock performance for Virgin Galactic, strictly looking at the numbers, there's no two way to put it, it was a terrible year. The stock is down 68.68%. Comparatively, the NASDAQ is down 29.92%. And frankly, it's not too surprising that the stock was destroyed given that Virgin is not yet profitable, generate next to no revenue, and experience delays. Now, after hitting a local low of $4.11 mid-October, the news during the earnings call in November that Virgin was still on track for the Q2 2023 commercial launch gave us some upside momentum, right? We were all excited about that one. That said, this was the warning I gave you at the time. And investors responded positively to the earnings call news. The stock is up 5.58% for the week to $4.92 after making a new low a couple of weeks back at $4.11 if you remember. If you look at the technical chart, after we fell below the 50-day moving average line, so that's the reddish line here, we are now slowly making our way back. It's too soon to tell if we get to flip the 50-day level from resistance to support, but the number you want to keep an eye on is $5.08. If we get past that and sustain, that's the key here, the next major wall is at $7.03. But again, we have a ways to go here. After getting as high as $5.49, we clearly weren't able to hold that level and actually crashed pretty hard in December, establishing a new all-time low at $3.24 to close out 2022. Now, with that said, we just wrapped up the first trading week of 2023, and Virgin Galactic is up 7.89%. It's nice to see some green on the screen, but we still have a ways to go, and I know I keep saying this, but here's what I mean by that. The 50-day moving average now stands at $4.54, while the 200-day moving average is at $6.16. We need to decisively get above the 50-day moving average, flip it from resistance to support. Until that happens, we will at best be range bound, and at worst, we could set a new all-time low if the macro trends lower driven by any kind of negative news related to inflation or higher than expected rate hikes as an example. The last thing to touch on then is the associated analyst ratings. The good news is they remain unchanged looking at the past 3 months. We still have 6 ratings with 1 buy, 1 hold, and 4 sell for an overall rating of moderate sell. The average price target is $5 with a high forecast of $11 and a low forecast of $3. The average price target represents a 35.50% potential upside from the Friday close of $3.69. Now, as we look forward, this bear market has been brutal and we're not out of it yet, right? So in times like these, staying laser focused on what comes next, in my opinion, is key to not giving in to FUD. So that's fear, uncertainty, and doubt. As a reminder, here's what Virgin Galactic communicated during its last earnings call. Took some notes to make it a little bit easier to go over. Work on VSS Unity is now completed. Work on the carrier plane VMS Eve was set to be completed in December. I dug pretty deep, but Virgin has been pretty quiet, so no way for me to confirm that they did or not, but I think they did. That said, a series of test flights are expected to take place in Q1. This will be kicked off with VMS Eve test flight this month in January. Following that, we should see a glide flight with both VMS Eve and VSS Unity. Last but certainly not least will be a rocket-powered test flight with their mission specialists. Official dates for each of these events has not yet been announced, but I expect that we should hear pretty soon here. Definitely keep an eye on my Twitter account. I'll more than likely break the news there as soon as it's available. This should then take us to Q2, where we expect commercial flight to start. I'll first kick off with the Italian Air Force flight, which we know was initially postponed last year in September, and finally move on to the private astronaut flights, which is what we're all waiting for, right? So as it stands, I expect that there will be some solid catalysts that should help breathe momentum back into the stock. And so my thoughts here are simple. Inflation data is releasing on January 12th. This will then be followed by the Fed's decision on the next interest rate hike due on February 1st. Assuming next week's inflation data comes in favorable and the Fed doesn't raise by more than 0.50 percentage point in February, the macro backdrop should not put a damper on Virgin Galactic stock specifically, right? So I don't expect that we'll go straight up because we never do, but if Virgin Galactic kicks off the test flight cadence as expected, that should create a positive enough environment for us to make a solid attempt at flipping the 50-day moving average from resistance to support. Simply put, we want the stock to get above and sustain $4.50 or greater. And with that, you're now caught up on all the key things I've been paying attention to. So what have I done in light of all this? December was all about shopping for me, right? So I added 700 shares to my portfolio. Once I felt that we were approaching a new bottom, I started buying again. You can see that my buys were concentrated pretty much in the last week of the year. I since then added another 300 shares this week specifically. With these 1,000 freshly acquired shares, I have now officially dropped my average cost below $10 to $9.97. The goal more than ever is to drive my average cost down at a minimum to the $5 to $7 range prior to commercial flight, right? And really, these lower prices make that goal much more achievable. The point being that the lower my average gets, the quicker I can return to a profitable state. The last thing I will say is this. Here's some fun stats for you. Nearly 40% of Virgin Galactic public shares are held by institutions. That's a big number. Another 18.56% is held by insiders, basically those employed by Virgin Galactic, also significant. Meanwhile, the number of traders shorting the stock increased in December. The bottom line is this. The stock is being suppressed, and for anyone professionally trading the stock, betting against it and driving the price lower was more lucrative than trying to push it upwards. That was all of last year, because there was no tangible catalyst to support a move upward. That is about to change, assuming commercial flight stays on track, right? And so as sentiment improves, initiating a short squeeze and driving the stock back up to $10 to $11 for launching commercial flight won't take nearly as much effort as people may think. And that's why I have no intention to stop buying while we remain near all-time low. This is absolutely a high-risk, high-reward play, but I'm pretty confident that the reward will be worth the risk in 2023. At the end of the day, my belief is there isn't that much more to squeeze out of the stock by pushing it lower. Also worth noting, Virgin Galactic has no debt and more available cash than its current market cap of $1 billion. Let that sink in, okay? This means that buying at these levels has zero premium built in. In fact, we're getting a discount, and personally, I like that a lot. But on that note, that is it for me today. We are now only 6 subscribers away from hitting 400. If you're finding value in my content, click that like button and share with others who you think could also benefit from it. For my newcomers, subscribe. It's free. And don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video. Till then, you can keep up with me here on Twitter for crypto and NFT related news. Thank you for watching. Stay humble, hustle hard, and I'll see you in the next one.